welcome to China Market Connect. In the January Fed committee meeting statement, Chairman Powell emphasized the economy is quite different. It is stronger, inflation is higher, and labor market is much better than it was. He repeatedly stressed the committee need to be nimble with respect to course of policy, and suggested there's quite a bit of room to raise rates. Market interpreted this as a signal for Fed to potentially halt its net asset purchase and start to raise rates in March. We witnessed a sharp bond sell-off led by higher real yields, reflecting investors' concerns over a more hawkish Fed. Both US and global equity also experienced a pullback in light of this development. But how does the Fed decision impact the China internet sector's performance? Here we studied the relative performance of the immediate quarter during the prior tightening cycles for the last 13 years between a few US indices and the CSI Overseas China Internet Index, and we found the China internet sector outperformed Nasdaq, S&P 500, and the US Growth Index for 7 out of the last 9 rate hike cycle since 2008. With an exception for the scenarios in the first half of 2018, where the China internet stocks underperformed other indices, mainly caused by geopolitical tensions that surprised the global investor. The Goldman Sachs Tension Index shows US-China geopolitical tensions raised sharply from 0 to over 60% from January to June in 2018. The steepness of the rise and the scale of the change reflected in the level of the market pullback. We don't expect this to be repetitive, particularly at the current elevated level that led us to believe the broad tension has now been pressed in. Clearly, each cycle embedded with its own macro conditions. And after removing the periods impacted by geopolitical uncertainties, China internet stocks outperformed each indices by over 50 to 60% during all the tightening cycles. In fact, in January, we also see the internet index outperformed these indices by 530 to over 900 basis points. And if the rate hikes are expected throughout the year, the outperformance trend could continue alongside. Obviously, these technical studies did not take into considerations of the fundamental macro conditions, but the market expects China to expand its fiscal spending, PBOC to inject liquidities, which are all opposite to majority of the developed market central banks tightening. So the pro-growth policies, attractive valuations, and potential performance catch-up from last year could all serve as a catalyst for China internet stocks to outperform. This is Xiaolin Chen. Thank you for watching China Market Connect. I see you next week.